Hi, and welcome to this morning's early concise highlight. It is currently 7:45 a.m. on Wednesday, December 16th, 2015, Fed Day. And we're coming to you a bit later than usual because we wanted to see the U.S. housing starts number, because along with better employment, bit of higher inflation, we wanted to see if housing recovered from the recent weakness, and it has. We'll be back to that shortly. So, what does all this mean to the markets? Well, the markets obviously have become comfortable with the idea the Fed's going to hike the rate because the quarter point likely hike. Fed might get creative and go an eighth, but more likely they want to go a quarter to get well off the zero interest rate level on the low end of the boundary. S&P 500 is up 12 at 2049. Now this is important because remember, this is the March contract, and while it's the lead contract in terms of trading volumes, it is still the second month, where the front month is still December until Thursday's close when it expires. Now December's trading anywhere from a $6 to $10 premium. It's kind of a liquid, so that moves around. So depending on the moment, it's a $6 to $10 premium. And what we have here is, therefore, obviously, if we're up at 2049 on the March, we're looking at something actually up into the next resistance at getting near the next resistance at 2058 to 62. Now, on the lead contract, that was one of the key levels as the market rallied last Thursday, and it overran it temporarily when it got up to about 65 or 66, but very temporarily into lunchtime it tried to overrun 2058 to 62 Thursday, but as oil continued to weaken, it came back under pressure Thursday and a lot of pressure out of Friday into spillover on Monday. But with the energy market improving now as well, we suspect that pressure is off, and guess what? Santa is back. So if we have to say where the next resistance is, let's think about roughly 2054 area, because that'd be the equivalent of 2062 on the lead contract, on the front month, December, and if it gets much through 2054, the front month can go up to 2075 to 80. Which is the equivalent of where we closed last week on Monday in the December contract. When this thing was sitting here at 2074, you were up at 2081, so approximately a $7 premium, and yet the gap lower Tuesday on the weakness of energy put the market under pressure for the balance of the week. So the equivalent of 2075.80 would obviously be anywhere from 2072 to 2067. So as the as the front month December would be back up into the sort of levels it left at the recovery close on last Monday, and up toward 2074. That'll be your next resistance if we get out through 2054 on the March contract. And of course, lower supports now are reinforced by an upbreak at 2034. That's very interesting because that's the equivalent of just above 2040, and 2040 to 35 is an important lead contract level, as we saw the equivalent early last week when the market held, in the midweek last week when the market held before coming back under pressure on Thursday. So those are your key levels. And the psychology right now, with the market gapping higher, actually favors the bulls because we came all the way out of Monday's pressure, relieving it on Tuesday, and getting above the upside of the upper runaway band on the hourly MACD. This favors the bulls for now until the market should sputter and start to reverse enough to put it back below that band. And that pretty much does it for the short-term view of the S&P 500.